Hello everyone, welcome to another episode of Industry Experts. I'm Theo Law, your local property agent in St. George area, Sydney. Today I'm so excited to have my friend and business associate Joseph Meawad, the principal and senior advisor at Trinity Financial Advisers. Joseph has over 25 years international experience in finance sector. He has worked in numerous of organizations, major banks and financial institutes in Sydney, Melbourne, London and New York. Without further ado, let's get into it. Thanks for joining us, Joseph.
Thank you, Theo. Appreciate the time.
Today we're going to talk about financial planning and topics around property investment.
Yep.
Before we start, could you please give us a quick introduction of yourself?
Sure. Before we get into it, I need to sort of give a qualification that, any advice today is general in nature and doesn't sort of take into account anyone's personal financial circumstances. That's very important to sort of get that out of the way. But in terms of a little bit about me, I've been in this game for over 25 years. Like you mentioned, I've worked in Sydney, Melbourne, London, New York for a lot of the banks, and I've learned to sort of hone my skill in the areas of accounting, tax, lending, and investments most importantly. So that's sort of the wrap up of 25 years.
Awesome. Guys and girls, Joseph also a local in the St. George area, and he also holds a bachelor and a master degrees in finance. So he's the money man. When it comes to money stuff, you need to speak to this guy.
Thank you very much, Theo. I think in our conversations you'll remember that I've said to you one of the things that we're not taught at school is how to manage relationships and how to manage money. It would be good if we were taught some of those things, but unfortunately we're not. So we need to sort of make a do and sort of reach out to a professional where you need it. If you've got an electrical problem at home, you'll call out an electrician. The electrician, you might have a rough idea of what to do, but you wouldn't go about doing it yourself. Chances are you might get electrocuted. Everyone sort of knows how to change the oil on their car, but they still take it to a mechanic to get it serviced. It's no different when it comes to money. With money, you do need to be dealing with somebody who's qualified and has the expertise to cover the issues that you need addressed.
Joseph, let's start the first question.
Sure.
I guess so many audience like myself, we sometimes couldn't understand what exactly financial planning is.
Yes.
And we have this question in our minds that why do we need to engage a professional financial planner, right? You touch on a little bit, but what exactly do you do?
Sure. So we assist people by producing a financial plan. That financial plan could be related to a number of events that have occurred. You might be about to get married, or you might have been retrenched, or you might be approaching retirement. So there's a number of moving parts in life. So it's all sort of event driven, and so you will require a financial plan, and that could cover the short term, the medium term, and the long term.
I see.
So financial planners put together a financial plan. Actually, it's called a statement of advice. We can't just tell you, go buy these shares or go buy this, go get some life insurance. We have to actually give it to you on something called a statement of advice. It's a legal document that tells you the recommendations that we are making.
Okay. It's like an architect of our lives or a coach of our life. If we have a destination or if we have a goal we want to achieve, for example, financial freedom or whatever goal in our life, we need a coach by our side.
Correct.
Yeah.
Absolutely correct. So I like your term of coach, and it's not just a set and forget. That's really, really important. What's important is that you set the financial plan and then you review it consistently and regularly. We are there along the journey. Let's use an example of somebody's got an elderly parent, they pass away, and then they come into some money as an inheritance. What do you do? where do you start?
All right, Joseph. Second question.
Yeah.
What are you specializing in, or you are just focused on the result?
I do specialize. So we deal with what's known as the accumulator space. So the accumulators are people who are just at the beginning of their wealth journey. You know, they might be a young family, married, couple of kids, and so they have a number of moving parts. You know, there's extracurricular activities, there might be private school fees, they've just bought their house and they've got a lot of debt, and they look at this debt and they think, how am I going to pay it down? It's 30 years, it's like a prison sentence. And so we work in that space, and the specialty across the accounting, across the tax, across the lending, across the investing is essentially to how can you pay down that debt in sort of a rapid time without dramatically altering your life.
So if basically you help people who just starting out, when do you think a person should start getting advice and getting coaching from a financial plan? Should a person start straight out of school, straight out of uni, or when they got the first job, or before they buy their first home? When is the ideal time for them to start?
The ideal time is essentially when you start earning money,
okay,
or you come into money through an inheritance or gifting of some sort. But once you start earning money, you want to start developing good habits. What does that mean? Paying yourself first before you pay other things. And what I mean by that is, not necessarily going out and buying flashy stuff or whatever it is, just putting away for a rainy day, or having a goal and then working towards that goal. It might be, I want to build a deposit. How do I tackle that? Well, I need to set in place a budget. I need to know what's coming in, because what comes in is normally one source, right? Your wages go in to your bank account, for example, but the going out is multiple. Whether it's your mobile phone, or whether it's petrol or car registration, etc., etc., etc.
Mm-hmm.
So you want to have a very solid budget in place, or essentially cash flow coaching,
okay,
cash flow modeling.
All right, so now we know the timing, we know it's important. The next question is it expensive? I know, Joseph, is case by case, so you don't need to be specific, right? But just give us a rough idea. What's the fee or what's the cost involved?
Good question. Let me put it to you this way first before I answer that question. If somebody were to put you into a position which helps you achieve a goal, whether that's to pay, let's say you have a mortgage, it's 30 years the loan, and you've paid it down in 10, that means you've saved 20, right? 20 years, 240 monthly repayments that are no longer being paid. What is the value to you?
Oh yeah, that's gold.
What would you pay for that, right? And so the answer to your question is that it can be costly to get a decent financial plan in place, ranging anywhere from a couple of $1,000s to north of $10,000. It can be quite expensive.
That's right.
But ask yourself, what's the value? If it helps you achieve the goal, is the price a major factor?
That's right. I guess all we need to remember is we focus on the value that we get out of
Correct.
the net value, right?
Correct. I mean, it's no different to, example, somebody coming to see you. They want their dream home. If you find it for them, when you find it for them, how do they feel? Is money really
to put
that?
a dollar figure on it.
Is it relevant?
Mm-hmm.
No. So it's exactly the same. It does cost. There is a cost, but I think the primary concern is what is the goal, and as we are all unique in our goals, the circumstances will change, and the costing will change.
Right. Since you touch on a little bit of properties and real estate, can I ask you what is your advice for someone who is looking to purchase their first home?
Good question. So I think one of the most important things is to have a budget set for the purchase. And then once you've worked that out, you then need to think about, well, how much deposit do I need to have? and have a goal towards achieving that deposit. And so that will entail seeking some budgeting and cash flow advice. What things can you do? If you've got things like a HEX debt, you should be starting to consider paying that down. You should be reviewing credit card limits because they detract from your borrowing capability. So there's a whole range of things that, once somebody has sat down with a financial planner or a mortgage broker, or they could be one and the same, then they can sit down and work out a plan towards buying that first home.
Awesome. And a quick one, Joseph. Any tips on saving up the deposit for the first home? How can they save up money faster?
A lot of people at the moment are very sort of, involved with, say, an afterpay, or you go down to a local cafe and you just tap. So we've sort of turned into this society where it's cashless. And it's very scary from the sense that because it is a cashless society, we don't see the money go out. If you cast your mind to, say, 10, 15 years ago, you'd be carrying cash in your pocket and you'd go buy your lunch and you'd hand over a $10 note and you'd actually feel it. Now you don't feel it. All of a sudden, you just scan your phone and all of a sudden there's $3.50, $4 for your coffee gone. And you do that multiple times. So you must have good habits in place. Otherwise, achieving that goal of having the deposit is going to be, it just gets pushed out.
Out of sight, out of mind. So if you don't see the cash,
that's exactly
you're not
right.
aware.
That's exactly right.
And
so can I just,
Sure.
So on that point, once the money, like your wages go into your bank account, there should be some way of separating some money for your deposits or for your goal. And then what's left is what you could spend. That's generally how we would approach it. Rather than, it's just all in the one account. Once it's moved, then the psychology becomes, well, this is what's left, this is therefore what I can play with. As opposed to, okay, let's say you earn $2,000 a week, and the $2,000 is sitting there in the standard account, you can just keep tapping away that $2,000.
And also, Joseph, what's your opinion towards credit cards?
So credit cards are a useful tool if used wisely. And what I mean by that is that they're paid off at the end of the month in full. However, if you start going over and incurring the interest charges, they're almost like 19%, very expensive. And it makes it harder for you to sort of get on top of things. And then what happens is the banks start throwing, another credit card at you and another credit card at you. And all of a sudden you might have, 5 credit cards with $10,000 limit each. You've got $50,000 worth of credit. That $50,000 is going to make it so much more difficult to get a loan or to service a loan,
So your opinion is credit cards still a useful tool, but just be cautious.
Yes, there's definitely wisdom in using them. So for example, a utility bill is going to come in, you use it, you get the interest-free period, for example, and then you pay it off in full once you've received the money.
All right, Joseph. So the next question is, how am I gonna pay down my debt on my property faster?
Sure. So as financial advisors, we have a whole range of strategies that we can employ to pay down debt faster, just a number of financial strategies. One of those strategies is known as debt recycling. So debt recycling sounds a bit strange, but essentially you're paying down bad debt and converting it to good debt. And how does that take place? Well, you actually, every time the equity in your portfolio increase, you can extract some of that equity and take it away and go invest in a property or some managed funds or whatever it is. It sort of recycles and converts that bad debt into good debt. So what's bad debt? Bad debt is debt that gives you no income and also gives you no tax benefits. Good debt is obviously the opposite of that. So we want good debt and we want to quash or eliminate the bad debt.
Awesome, Joseph.
Does that make sense?
Yeah, absolutely. And before we wrap up our interview, Could you please tell us a success story or case study of a client that you help?
Yeah, absolutely. So I currently have a client who's been with me for 5 years. Let's call them George and Kim. George and Kim have 3 young kids. They came to me in their early 30s, and they are now on track to pay their mortgage off in the next 10 years. So they would have paid it off in 15 years' time. So they will be, let's say, 45 by the time their mortgage is paid off. What do you think, Theo, would be the feeling of somebody who no longer has to pay a mortgage?
Oh wow, I quit my job, living in the dream.
So essentially, when they came to me, they had just refinanced their loan. So they got 30 years to go. So they were going to be 60 when this was paid off. Now they're looking at 45. So, that's the saving of 15 years is essentially 180 months of no more repayments.
Wow.
That's what they're saving. What are they going to do?
Wow.
They've got, all of a sudden they got like maybe $5,000 a month of free cash flow, which they can allocate to their wealth journey.
Wow. So for a 30 years loan, they paid it down in 15 years.
Correct.
Wow.
They've got 10 years, they've been with me for 5 already, and they've got a further 10 to go.
Fantastic.
But they are on track to do that.
Wow. Are they high income earner or are they just average household?
Average household, about 150 grand of household income.
Unreal.
Yeah.
Awesome. Joseph, if some of our audience, they also want to achieve the same success, what do they do?
Well, that's a good question, because today we are going to offer a complimentary financial health check to the first 5 people that book in. So we'll give a glance over their financial affairs and tell them if we can help them. This is normally $330 for that session. We are going to offer it to the first 5 people that comment in the post. They can achieve this free financial health check today.
Can I be the first? All right.
Absolutely.
Guys and girls, the first 5 people who comment below will receive a link to book in the appointment. Through the link, you will receive a free complimentary section with Joseph, a one-on-one service.
That's absolutely right. And we are corona friendly, so you can come into the office here at Hurstville, or alternatively, we can conduct a Zoom meeting if that's what your preference is.
Wow, that's wonderful. Thank you for being so generous.
So yeah, thank you for your time. I really appreciate it.
Awesome.